Good morning and welcome to your Executive Intelligence Summary for March 6, 2026. All right, let's dive right in. Here's our operational roadmap for today. We'll kick things off with our lead story on a widening war. Then we'll cover macro, politics, and governance. After that, it's corporate and business intelligence, a look at the editorial pages, and we'll wrap up with the market close. Okay, let's get into our lead story. What started out as a conflict way over in West Asia, well, it's now officially spilled into the Indian Ocean, and that puts it right on India's economic doorstep. This is absolutely not a distant problem anymore. And the speed of this escalation is frankly staggering. Look at this timeline. The fighting kicks off on February 28th. Just a few days later, the Strait of Hormuz, a critical waterway, is blockaded. And then bam, on March 4th, this conflict gets very, very close to home. The U.S. confirms it sank an Iranian frigate, the IRS Dana, just off the coast of Sri Lanka. So what does this actually mean for India? Well, the data paints a pretty stark picture. Right now, there are 37 container vessels just stuck, unable to leave the Persian Gulf. Think about it, a third of all our crude oil imports, they have to pass through that now blockaded Strait of Hormuz. And here's the kicker. We've only got about 25 days of national reserves for crude, petrol, and diesel. It's a tight spot. And it's not just oil. We import over half of our natural gas, and a full 50% of that comes from Qatar, which is smack in the middle of this whole thing. So, as you can imagine, this puts New Delhi in a really tough spot. And we're already seeing two very different schools of thought emerge on how to handle it. On one side, you have the Hindu, which is pushing for India to take a strong anti-war position. Their argument is, hey, this is in our backyard, we need to oppose this escalation. But then on the other side, you have the Mint. They're saying, look, our number one priority has to be energy security. They argue we need to get our oil from wherever we can, even if that means looking to alternative suppliers like Russia. All right, let's shift gears now to the domestic front. In macro politics and governance, we've got 4 key updates for you. First up, a big move in Bihar. Nitish Kumar has filed his nomination for the Rajya Sabha. You know, this really signals the end of an era. He's been chief minister for almost 2 decades. He's expected to be heading to Delhi in a few weeks, which means the conversation about who's next is already heating up within the NDA. Next, we've got a major reshuffle of governors. This is a big one. The most notable move, R.N. Ravi is being shifted from Tamil Nadu to West Bengal. And you have to look at the timing here. It's pretty sensitive, politically speaking. These changes are happening right before key assembly elections in both of those states. Meanwhile, down in Andhra Pradesh, there's a focus on a very different kind of challenge, demographics. Chief Minister Chandrababu Naidu has just rolled out a new policy to tackle the state's declining population. And this chart really tells the story, doesn't it? The state's current fertility rate is just 1.5. To just maintain the population, you need to be at 2.1. So this new policy is designed to incentivize families to have a third child to try and bridge that gap. And wrapping up our domestic updates, a key diplomatic meeting in Delhi. Prime Minister Modi met with Finland's President Alexander Stubb. The big takeaway? They both came out strongly saying that dialogue is the only way to solve the conflicts in Ukraine and West Asia. It really reinforces India's official line, focus on peace and diplomacy. Okay, let's turn to the business world now and see how all this geopolitical tension is hitting key sectors. We're talking energy, aviation, and finance. No surprise here, energy is still the number one concern. This chart shows just how reliant we are on Qatar. About half of all our natural gas imports come from there. So what happens if that supply gets disrupted? Well, ministries are already scrambling to put together a contingency plan. We're talking about potentially rerouting gas supplies to critical areas like fertilizers and city gas distribution. And the aviation industry is definitely feeling the turbulence. Indigo, in particular, has been hit with a nasty 1-2 punch. First, they had to cancel over 500 international flights in just a few days. That alone wiped out more than 17,000 crore in stock value, though it's recovered a bit since. But it's not just the lost ticket sales. They're also getting slammed by higher fuel costs and new restrictions on leasing planes. It's a perfect storm that puts a huge risk on their earnings. In other business headlines, it looks like the Eversource Capital and BlueSmart saga isn't over. The private equity firm is reportedly trying again to buy the ride-hailing company's assets. You might remember their last deal fell apart. This time it seems they're trying a different route, through insolvency proceedings. And this is a really interesting one from the world of finance. The RBI is teaming up with the UAE's central bank. Their goal? To link India's e-rupee with the UAE's digital currency. Now, think about what that could mean. Could this be the project that completely transforms remittances? We're talking near-instant money transfers from one of our most vital economic partners. It's a huge question.
Okay, let's see what the opinion pages are saying. We're seeing two really contrasting takes on how India should play its cards in this widening conflict.
So let's break down these two arguments. On one hand, the Hindus' take is that the US is basically sleepwalking into a bigger war without an exit plan, and that creates very real risks for India that we need to stand up and oppose. But then you have the Mint, which is all about pragmatism. Their view is, if there's a supply shock, India's only job is to get oil at a decent price. Period. It doesn't matter where it comes from. This one quote from the Hindu's editorial really sums up their position. They write, "Rising oil and gas prices will strain the Indian economy, millions of Indians in the region face elevated risk, and New Delhi should oppose escalation more clearly." And then, in sharp contrast, you have Mint. They boil their entire argument down to this one powerful sentence. In a supply shock, India's priority is availability and price, not provenance. It just perfectly captures that clash between diplomatic principles and pure economic reality. All right, and to wrap things up, let's take a look at the verified market numbers from yesterday's close on March 5th. Okay, so the Sensex closed up, hitting 80,015.88, and the Nifty 50 was also in the green at 24,765.9. In the currency market, the dollar got stronger, trading at 91 rupees and 60 paise. But here's where you really see the impact of everything we've been talking about. Gold took a big hit, down almost 4.4%. And Brent crude oil, it jumped over 4% to 84.36 a barrel. Clear sign of the market's anxiety. And that concludes today's briefing.